May profits be upon you. Welcome to another weekly Forex forecast. Um, this past the past couple of weeks have been choppy, and there's been a lot of news, a lot of Trump announcements, tariffs, the argument with Zelensky in the U.S. and with that relating to the status of the war that they're having with Russia and oil prices, and it's been a mess. It's been a crazy mess. It's been chaotic, and the markets have reflected that insofar as moving their money out of riskier assets and putting them into safe havens. Um, let's look at the news calendar coming up. We can see that on this is going to be a red folder week. There's going to be plenty of juice in the markets, and that's every day this week. Okay. Uh, the main one we want to look at is the euro is going to have their monetary policy, the interest rate decision on Thursday, and then Friday we have NFP. That's a huge one. All right, this is the one that can reverse markets. All right, like the CPI data for the U.S., like FOMC and interest rates. Right, those are the ones that can throw markets into a tailspin. So we have those things to be careful. All right, now in the equity markets, let's talk about the S&P. All right, this is the weekly time frame. And what do we see? We closed lower last week, lower than the previous weekly close, the previous candle's close, right? So that would indicate more bearishness, right? But here's the full context. There is a respect candle being given here, right? A lot of rejection there. The bulls stepped in to kind of push the push back on the sellers. All right, the bears, and you can see the respect being shown here. Where is it being shown from? All right, there is a daily. We're on a weekly now. This is a daily demand, an area of demand that is being shown respect. And you see the candle that came behind that almost completely corrected the day before. All right, but that's not the last thing I want to show you. All right, look at this. You see this low, you see that low. All right. If we look at NASDAQ, we have the opposite. That same low, same day, and this low, same day. It swept those lows. It swept the sell side liquidity, which I annotated here. All right, it swept the sell side liquidity for what? A move up, perhaps. All right. Now we have some other areas to take liquidity here. All right, for sell side liquidity, but this is the one that price swept. This indicates this difference, this divergence is what smart money traders, ICT, calls smart money technique, or SMTs. The only thing that it does, though, for me is tells me which market I want to take a long and which one I want to take a short in. It tells you which one is stronger, which one is weaker. That's all. All right. And all you want to do is say, okay, well, if I'm going to take a long, it'll be in the stronger market. That'll be in ES. So I'm looking for price to continue to show strength so that I can take some longs. All right. I would take shorts in the NASDAQ because it's obviously weaker, and you can see here that there was from that low to this low, that's a large area. All right, all that was offered here was sellers. Sellers participated in this market. Price is likely going to pull back into that to offer fair value, and then we'll see what happens after that. Am I going to take a short? Am I going to take a long? Am I going after these lows? I don't know. All right, but I am going to consider the fact that this market is a bullish market. This is NQ. You can see it's bullish, right? And you can see with the S&P, it's also bullish. Same thing with the the Dow. It's also bullish. I'm looking for reasons to take buys. I'm not interested in taking shorts in these markets. So that's my standpoint because it always goes up. Yeah, you get your occasional crash. You get your occasional pullback. 5%, 6%, maybe a 10% crash, whatever. You get those, but they always come back up. I'm looking for in this market because we haven't broken the overall trend. We haven't broken that trend yet. Once we start trading below these lows here, that's when you start to say, okay, we're probably going for a longer term pullback. All right, down to these lows. All right, but until that happens, I'm looking for longs, and I think we may see a turnaround from the current prices. Okay, so I'm looking for long setups. If we go to the daily, you can see that like on again, let's go back to the S&P. You can see that we almost completely corrected the previous candle, Thursday's candle. This is Friday's candle. We're starting to recover. I'm waiting for price to pull past that high. I like this high. I want this high to. I want to see price move past that, pull back, because this then becomes my area of fair value. Once price offers fair value, this is a higher probability trade to ride up. Got it? And the same plan is for the NASDAQ. Again, I'm going to take a buy. If I have to choose between these two correlated markets, I'm going to take a buy in the S&P. I'm going to take a short in the NASDAQ if that's what I need to do. But if I'm going to take a short in any market, it'll be with any index. It'll be the NASDAQ because it's obviously uh, weaker. Look at this. We have a fair value. Sorry, we have a fair value gap here. We have a bearish fair value gap here. All right, and we also have one here. All right. Price could definitely price could definitely dilly dally over here for sure, and take its time going up. All right, this little pullback from this demand zone is not encouraging. But what is encouraging is that we took that low, we took this low, we took this low, all of this. We sweat here. I'm looking for price to use that sweep and pull back. All right, and I think that we have good reason for it. If we go down on lower time frames, which I won't right now, we can wait for our buys. But until price starts to show a market structure shift, all right, a bullish market structure shift, like above these highs, above that high is the one I'm waiting on, and I will wait patiently for it. Well, until market does that, I'm going to hold tight. All right. If we do this and we pull back, and this is the fair area of fair value, I'm waiting for that to be broken. I need to see two of them. One, two. I need to see at least two, and the two areas of fair value. Once price pulls back into that, that is the technique I use. Okay, you can do whatever you want to do. All right, this one, once it breaks that high, then it's official. We can start looking for these all-time highs to be made. Same thing with the Dow. Lots of buy-side liquidity up here. All right, here. All right, at the all-time high. I'm looking for price to aim towards that. It's a bullish market. I'm waiting to see right here what price is going to do once it gets up here. I want to see price break that high, pull back into our area of fair value, and once it does, this is a high probability trade to the upside. That was supposed to be an arrow. Okay. All right. If we look at gold. If we look at oil has been very, very confounding. Sorry, I got all of this mess here. Doggone it. All right. If we go to the weekly, you can see that we have a narrowing of price. All right, that's a squeeze, and usually price will pop higher or pop lower, but that squeeze is there. All right, we are narrowing, and and we are in the middle of this consolidation. I don't want to play in the middle. No, 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 no. This is a dangerous area. You see, uh, each weekly candle has been pushing up, pushed back, push up, push back, and now have a indecisive candle here. All right, this isn't favorable market conditions. Uh, you don't want to trade in this environment. All right, but I am bearish. I am bearish, even though the lows down here. We have the lows down here, which will attract price. It will be a draw on liquidity. We have a bullish break of market structure to the upside, and this is the pullback. Here's the problem with this pullback. All right, it's choppy. It keeps going lower and lower. Right now, this pullback into this range, this is about 80%. Right? If you put your Fibonacci retracement tool on it, you can see. Let's see. Yeah, you can see that we're pulled back. Look at that, 786, almost exactly to 80%. All right, and when price starts getting to to this area, once it crosses this area, it usually means that it's probably going to keep going. All right, now we haven't quite reached it just yet, but we're very close to it. What am I looking for? I'm looking for price to recover. All right, I'm looking for price to resume the bearish, the not resume, continue being bearish. All right, what do we have here? You can see that we had this sell, this buy to sell, boom. All right, this area is the last buy to sell area that we have here. All right, boom, boom, price pulled out of that. Let me see what we got here. Help me out here. Help me out here. There you go. All right. We got another one here. Buy to sell. So we have a supply chain. All right. And we're tapping it right now. Okay. What am I looking for? I'm looking for price to either break this high, give us a bullish market structure shift. All right. And then pull back. And this becomes my area of demand. And I can take a, you know, a, a good buy there. But until I start to see market structure shifts to the upside, I am bearish. I'm going to be looking for sells. This is an area that we should be looking for sells. And if price breaks that high, then we're dealing with this area, with this area of supply. And I'm waiting to see if price pulls up into that. I would like to look for a bearish market structure shift from here. All right. But right now, I'm going to look from here to take a short. If it pulls back up, then I will look for a sell up here where the sell zone is located. So that's it. Buys. I'm not in a hurry to take no buys. All right. There's some liquidity. There's some liquidity to come get up here. These highs here, but I like the move down. All right, it's stair stepping down. So why would I go against that? All right. If we're looking at gold, gold has been a rough one too, but it is, like I like to remind people, bullish. All right. Overall, this thing is bullish all the way up. All right, and I'm looking for reasons to take buys as opposed to sells. If we look at the weekly, matter of fact, let me go back. If we look at the weekly, you can see this was a bearish engulfer. All right, this is a very bearish candle, and it indicates that there's probably some more bearishness to come. But here's the deal: you see this line here? This is the high. This is the old all-time highs, right? and price broke out and pulled back to that breakout area. This is where we usually find some kind of support for higher prices. All right. And if we go to the daily, we can see that here's that here's that high. And at the same high, we see this, sorry, hmm, we see this area of sell to buy. All right. This is an area of demand. That's why I have this golden area, this golden line here, because that's what we're tapping right now. All right. Price came down all last week and stopped short here. We took the low of this candle, took that liquidity low into this demand zone. I'm looking for price to find some support and see if we can get some higher prices from there. All right. We need to see a bullish market structure shift on the lower time frames, like the 4 hour. And I would like to see it happen here on this candle. All right. And let's see what time it is. Okay. Yeah, I would like to see it on this candle here. All right. I'd like to see price push up, pull back. This becomes my area of demand, and I can continue higher from here. That's what I'm looking for. All right. If you want to continue bearish, you can if you want to. All right. I like that it swept this liquidity, the sell side liquidity, into an area of demand. I'm looking for price to continue higher. All right. If we look at silver, silver is kind of uh, uh, in a similar situation, but it's weaker. All right. But what I want you to see is, like I showed you in the last week's video, we have price moving in this upward channel, this ascending channel, and we have pulled back bearishly into this area of demand. I'm looking for price to find support here to continue higher. I'm not interested in taking shorts in this market. Okay. And you see that eyeball there, right? What am I watching? I'm watching the reaction to current where price is at currently. I'm looking for price to continue higher from here. All right. I'd like to see it reach up and take that as a buy side liquidity. I don't want to see it going past this low. I do not want to see it going past that low. All right. So if it does does continue down, I'm looking for this area here to hold. All right. And then we can see a market structure shift to the upside, and then we can keep on going. All right. Platinum's a mess. I would avoid it at all costs. It's ranging, and if you're a range player, sorry, I don't know where did my market just go. Okay, if you're a range player, price is in an area that I would be looking for buys from. All right, it just swept this low here, and it's in. This is the top 25. This is the bottom 25% of this range. This is where I would be looking for longs. I'm not looking for shorts in this area. I'm looking for a market structure shift to the upside, and then a pullback, and then I can continue higher to the other side of the range. All right. And if we look at copper very quickly, copper is in a similar situation. You can see that it tried to swing up high here, but prices pulled back from that beautiful move to the upside. It's a beautiful move, and we pulled back about 50%. All right. I'm looking for price to find its footing. I'm looking for price to find its footing. Sorry, thought I had it. Find its footing, and then we can take take the move to the upside. Am I interested in taking a short in this market? No, I am not. I'm looking for longs. All right, and that's it. I hope you enjoyed the market, the forecast. Make sure you be patient. Let the market tell you what it wants to do, and just be careful. May profits be upon you. I hope to see you in